Hi there, good morning. Thanks for starting your day with us. You're watching Market Cafe on ET Now. It's me, Snehisha, and with me is my co-anchor, Shreyansi Singh. Shreyansi, wishing you a very good morning. And well, this is a show where we'll take you through all the important global stories that we're tracking for you bright and early this morning. And in the second half of the show, we'll also delve into domestic markets and look at all the stocks that could be potential buzzers in today's trading session, as well as what brokerages are flagging off for us. We'll also be talking about all the results we saw yesterday and the results that are about to come in the week ahead. So with that, let's kickstart the show then. And Shreyansi, tell us what the handover is looking like from the global markets.
Absolutely, nothing like the color that I'm wearing today. And what you're seeing is a losing day in a truncated week. So when you look at stock futures, they were flat in overnight trading following a losing session that I just talked about to kick off the holiday shortened trading week. Stocks finished lower during this session as fourth quarter earnings season gained steam. And when you look at the yield on the 10-year Treasury note, that also marched back above 4% after commentary from Federal Reserve Governor Christopher Waller warned easing monetary policy may come slower than anticipated. So now when you look at action on the indices front, you're looking at the Dow that fell about 0.6%, the S&P 500 that fell about 0.4%, Nasdaq Composite that fell about 0.2% thereabout. Now so far traders are pricing in a roughly 65% chance that the Federal Reserve begins cutting rates in March as hopes mount for a pivot. Now the yield on the 10-year Treasury, like I mentioned, that gained nearly 12 basis points and it was above that 4% mark, which it has been hovering around for much of the last week. So this is an important move coming in for the 10-year Treasury yield. But when you look at Wall Street, quite the losing session there, Snehi.
Well, absolutely, and let's also take a roundup of what commodities are looking like. Let's start by looking at what oil is doing, and oil prices were little changed on Tuesday, pressured as the dollar jumped to its highest in a month, but supported by jitters about the impact to energy supplies from escalating tensions in the Middle East. Global benchmark Brent crude futures rose 14 cents or 0.2% at 77.2 from Monday's settlement to 78.29 a barrel. Now at the session's high yesterday, Brent futures were up by $1 a barrel. And now weighing on the prices, the US dollar hit a one-month high as investors dialed back expectations of an interest rate cut by the Fed Reserve in March. A stronger greenback dents the demand for dollar-denominated oil among buyers using other currencies, so that's one key point to note. And oil prices drew support from signs of escalating tensions in the Middle East as the US military carried out a new strike in Yemen against 4 Houthi anti-ship ballistic missiles. Now, Houthi attacks on Red Sea shipping have been disrupting global movement for quite some time now of goods through the key trading route as well. Now, let's shift focus and talk about gold then, because gold prices have fallen over 1% on Tuesday, pressured by a firmer dollar and a higher US Treasury yields after Fed Reserve Governor Christopher Waller, like Shreyansi mentioned, his hawkish remarks on interest rates cut this year, but safe haven buying limited bullion's downside as well. Now, spot gold was down 1.3% at $2,027 per ounce after gaining in the previous 3 sessions, but managed to slip back into the green nonetheless. The dollar index rose nearly 1% to a more than 1-month high, making bullion less attractive for other currency holders, while yields on the benchmark US 10-year Treasury notes also gained. While we are talking about all these asset classes, let's mark another asset class, and that is cryptocurrency, because Bitcoin has seen almost a 0.5% rise back to that $43,000 mark, more than that in fact at 43,100 thereabouts. Ether is also up a good solid 2% as we speak. So well, cryptocurrencies are also seeing a lot of action, and other commodities as well. Shreyansi, they've been up and buzzing.
Absolutely, and there's also a host of events lined up. So when you look at the US, you've got the retail sales, industrial production data, as well as the beach book. Now when you look at UK, you've got CPI as well as PPI data sets coming in. So those are important, and in the Eurozone, there's CPI as well as core CPI. So that would also be in the spotlight. But in terms of corporate action, there's a host of corporate action. RPSG Ventures will be in focus on account of that preferential issue. Dhampur Sugar has a buyback, so keep an eye on that particular counter as well. Som Distilleries has a meet to mull fundraise, so that counter will be in the spotlights, and so will be Grasim, because there's a rights issue that's opening there. And Chambal Fertilizers, definitely the last day to be buying to be eligible for that particular buyback. So that counter will also remain in the spotlight. Now, in terms of other events that will remain in focus, you've got ECB's Christine Lagarde speaking at Davos. You've got Samsung S24 that is launching, as well as Tata Punch EV that is also launching. So those launches will remain in focus, and so will the Commerce Ministries meet on trade in Red Sea area. So let's see how that also pans out.
Well, absolutely, a whole host of cues, whole host of new launches as well. Exciting day in trade today, but let's take you straight to snow-clad Davos. Key commentary coming in from world leaders and company chiefs. Microsoft Satya Nadella said he sees emerging global consensus over artificial intelligence. Even as different countries have talked varied regulatory approaches towards it, AI is being spoken about in a similar fashion. Speaking at the World Economic Forum, Nadella emphasized on the need for global coordination on AI and a set standard to regulate the space. Meanwhile, the Bank of America chief Brian Moynihan has said that he is looking forward to focus shifting away from the Fed Reserve's rate decisions. As he emphasizes on the need for a dynamic approach, the situation in the US with growth and inflation, he says that they expect 4 rate cuts this year and another 4 in 2025 versus the 6 to 7 cuts anticipated by analysts. And of course, well, ace investor and founder and CIO of Bridgewater Associates, Ray Dalio, has said that 2024 will be a pivotal year, citing the largest impact from US presidential elections as well as geopolitics. On being quizzed about risks to the US economy, he added that China is not their greatest risk as of now.
Meanwhile, telecom giant Vodafone has agreed to a 10-year partnership with Nadella's Microsoft to bring generative AI and cloud services to more than 300 million businesses. Now, the British company will be pumping in $1.5 billion in customer-focused AI, says the same will replace physical data centers with cheaper and scalable cloud services.
Well, moving on then, the US economy is kissing distance of the Fed's 2% inflation target, but the central bank will not be in a rush to slash rates. That's the word coming in from Governor Christopher Waller. Regardless of when the rate cut cycle begins, the strategy is to proceed methodically but carefully.
And Google is laying off hundreds in its advertising sales team. Company clarified that their customer solutions unit, which serves medium-level advertiser clients, will be the core driver of growth going forward. The move adds to signs that job cuts will continue this year as companies look to adopt artificial intelligence software and automation to lighten workloads.
Well, shifting focus to some Wall Street earnings then, Goldman Sachs reported a blowout set of Q4 results, largely led by impressive results in their asset and wealth management divisions. Profits for the lender surged 51% to just over $2 billion, and Morgan Stanley too has surpassed revenue expectations, boosted by the strength in investment banking. Revenue from their investment banking division rose 5% on the back of a 25% increase in fixed income underwriting revenue.
Well, that's quite the update coming in from Goldman Sachs as well as Morgan Stanley. But with this, we're timed out on this segment. See you with more news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Let's take a look at the Asian markets then. And you're seeing an extension of the declines coming in today. Ahead of a slew of economic data from China, investors will also be assessing the Reuters Duncan Manufacturing Index for January, which saw business sentiment among large Japanese companies slide for the first time in 4 months. So that's definitely in focus. You're seeing the Nikkei up about 1%. When you look at Hang Seng on the other side, you've got losses coming in for the Hang Seng. There in your screen down about 1.8%. Kospi also in the red. So when you look at Kospi as well, you're seeing losses of about 1.5% coming in for Kospi. Shanghai as well as ASX 200 also in the red, but not as much. So when you look at Shanghai, you're seeing losses of about 0.4%, ASX 200 losses of about 0.2%. Now, Nikkei is the only one that is in green at this point, but largely Asian markets are extending that particular decline that we're seeing. When you look at the implied Nifty, yesterday we closed at 22,097, and today we're seeing a gap up open of to about 21,849. So we're seeing a solid start despite the weakness that we're seeing in the Asian markets.
In fact, GIFT Nifty indicating a rather weak start for us this morning. But with that, here's the news.
Welcome back. Thank you so much for staying tuned in. On to an 18-hour exclusive then. While there is demand-supply gap for power, the government will continue importing coal if needed, and that's the word coming in from Power Minister R.K. Singh. Now, in this exclusive conversation with 18 Hours, Singh sheds light on market coupling, new thermal projects, PLI scheme, as well as new proposed reforms as well. Listen in to this conversation.
We have emerged as a leader in energy transition. This has, we've already attracted investments worth about 16.5 lakh crores has been invested. And I have projects under construction of 17.5 lakh crores. So, see, in every sphere, and I'll just give you some figures. For example, the peak demand has gone up from about 136,000 megawatts in 2014 to 243,000 megawatts in 2023, and we met that without any shortfall. Talking about shortfall, the shortfall in energy terms used to be, and in the peak demand terms, used to be almost about 4.5% in 2014 when our government came to office. Today, that shortfall has disappeared. We've added so much of capacity. We increased the established capacity by almost about 70 or 80%. So earlier in 2014, the installed capacity was in the region of about 275 to 80 gigawatts. Today, our established capacity is 426 gigawatts, 426,000 megawatts. And I have a huge capacity under construction. I have about 27,000 megawatts of thermal under construction. I have further bid out another 12,000 megawatts of thermal for construction, and that makes it 39. Then we have another about 21,000 megawatts under survey, etc. That makes it almost about 60, and a further 21 candidate plants which are going to come under construction. That's thermal. Renewable, I have 99,000 megawatts under construction. I have already established 180,000 megawatts.
The market coupling is something which is a very comprehensive plan that has been proposed by the Power Ministry. So what's the update on that?
I think there's a study group that is that would have concluded its studies. So we'll decide on that. We'll decide on that very quickly. Our exchange is thriving, and our sector is growing hugely. As I said, that in energy terms, it has gone up, from 1,000 billion units in 2014, it has gone up to about 1,600 billion units today. So in every sphere, the production has gone up, the consumption has gone up. Imagine demand going up by 80% and us meeting it.
Okay. You have already decided to add around 80,000 megawatt capacity, that is coal-based thermal power plants. You had meeting with all stakeholders as well. Can we expect some more announcement with this regard, when the companies are coming to?
By and large, that's the capacity which we are adding. If needed, we'll add more, because I'm not going to compromise with the availability of power for my growth. Without electricity, you can't have growth. We are the fastest growing large economy in the world. No other large economy is growing at the speed at which we are. We are growing at 7.5%.
All right, that's the exclusive word coming in from the Power Minister R.K. Singh. But let's move forward then and shift focus, because South Korean automaker Hyundai is going to start a second plant in India, and it has committed 7,000 crore rupees investment in the state of Maharashtra. Now, Hyundai Motor India also today launched the Hyundai Creta 2024 facelift. ET Now's Sumit Chaturvedi caught up with Tarun Garg, the COO of Hyundai Motor India. Listen in to a slice of that chat.
If you see the Creta, we have really changed everything, whether it is the exteriors, the front look, which is much more bolder, the rear view, and of course, the interiors, which will give you a digital cockpit feeling, 10.25-inch infotainment system, integrated with a 10.25-inch cluster, ADAS level 2, 70-plus safety features, and a 1.5 turbo engine, which will give the customers a lot of power. So whether it is safety, whether it is technology, whether it is looks, whether it is features, we have really gone ahead, and really customer given the customer much more than what was anticipated.
And sir, one question on the GM's new plant which you have overtaken, and you are going to making it your second plant. What was the need for that, and what are the investments that you're going to put into that?
So basically, as you know, India is a very important market for HMC, and we now contribute more than 18% to overall HMC sales. And the new plant in Talegaon, sometime in 2025, it will start operations, and it will help us to reach the capacity of 1 million in the midterm, and of course, serve our customers even better and even faster.
And onto some turbulence in the aviation space, then the Aviation Ministry issued show cause notice to Indigo after a video of Indigo passengers eating dinner on the tarmac went viral. And following this, updated SOPs were announced for airlines to be followed. Sameer Dikshit filed this report earlier.
Definitely a big and hectic day for Aviation Ministry and Minister Jyotiraditya Scindia. Earlier in the day, the ministry issued a show cause notice to Indigo Airline as well as to the Mumbai airport for failing to comply with the civil aviation requirement rule that caused great inconvenience to the passengers. We have seen that in the viral video, the passengers were having food at the tarmac site, and after the video went viral, Minister held an important meeting at 12:30 a.m. and then the BCAS issued a show cause notice. Now both Mumbai airport and Indigo, they have to reply to the show cause notice on 16th, based on which we will see that more action the ministry might take. And then Minister issued the updated guidelines related to the problem that the passengers are facing at airport. The updated guideline mentions that war rooms have to be set up at 6 of the metro airport, and these war rooms will monitor the updated information, what sort of facilitation is being done to the passengers in terms of arrangement. And also the CISF personal deployment has been increased with immediate effect. Also, the airline, are they adhering to the SOPs issued by the DGCA? And that has to be, the entire report has to be updated to the Aviation Ministry thrice a day. So this sort of updated guideline has been issued by the minister. And the ultimate motive of these sort of steps taken by the government is that the inconvenience that people or the passengers are facing at airport because of the flight delay or flights being cancelled, that these problems has to be reduced. The inconvenience has to be mitigated as soon as possible.
All right, thanks Sameer for all of those details. But with that, it's time for a breather on this segment of Market Cafe. We'll be right back with more stock-specific news on the other side. Welcome back and thanks so much for staying tuned to Market Cafe. You're watching ET Now. Let's shift focus and talk about some Q3 earnings and the big bank. HDFC Bank reported a mixed bag of Q3 results yesterday. So let's go across to my colleague Gaurav for the fine print and the lowdown on all of those numbers. Gaurav, good morning. Break down these numbers for us, please.
Yes. So first, let's quickly look at the numbers. If we talk about the profitability, the net interest income and profit pre-provisional tax was up almost by 4% on a quarter-on-quarter basis, which was largely in line with what the street was expecting. But PAT was actually 2.5% up on quarter-on-quarter basis, which was actually ahead of what the street was expecting. Talking about the numbers, let's also look at what the bank has to say about the loan growth outlook going ahead. So what is happening right now in the HDFC Bank is that we have already seen that the deposit growth was muted at 1.9% on a quarter-on-quarter basis, while the advances grew almost by 5% in this quarter. Now, this could be a little problem for the bank because liquidity coverage ratio for the bank is now at 110%, which is actually a lower range for the bank. Bank wants it to get between 110 to 120 levels. If we talk about the loan to deposit ratio, that has also gone up to 110%. And this is basically pre-merger. If we talk about this ratio, the ratio used to be at 85 to 87%, and bank has said that if we exclude the merger's impact, it would be somewhere in the range of 89%. But still, this impact is going to let's also talk about CASA ratio, because CASA has also declined to 37.7%, whereas the bank wants to bring it down to 40%. So what is happening overall is that for the loan growth to go further, they need deposit rate to pick up the pace of the loan growth, and deposit rate growth has to actually outpace the loan growth, and for that it will take some quarters. And on back of this, we have seen some brokerages cutting the EPS guidance for the bank because the loan growth has to pick up, and for the loan growth to pick up, deposit needs to outpace the loan growth. Bank has also cut down their guidance for branches. They were going to add 1,500 branches in FY24, but now they are saying that they will add only 800 to 1,000 branches, and 550 branches are already in the pipeline for the bank. And lastly, for the NIMs, which is net interest margin, again the CASA ratio improvement is very important because this will bring down the share of borrowings in their total liabilities. So overall, there are some concerns going on the deposit growth rate, and like because of that, the loan growth rate. And on back of this, we have brokerages. Axis Capital has buy rating on the bank and target price of 230 rupees, while they have also cut the earnings FY24, FY25 earnings by 4 to 5%, and they are also factoring lower NIMs for the bank. CLSA has also maintained buy rating and a target price of 2,025 rupees, while they have also cut estimates by 3 to 5% in the next 2 years. Morgan Stanley has overweight rating with a target price of 2,110 rupees, and they have also cut the estimate by 3%. And Nuvama, lastly, they have neutral rating and a target price of 1,730 rupees. They have also cut the target EPS for the next 2 years by 5 to 6%. So overall, we are not seeing any kind of big downgrade coming up in terms of rating or in terms of the target price, but it seems that brokerages are being a little cautious over the growth rate of loan for the bank going ahead.
All right, thanks Gaurav for that update. Let's also listen into the word coming in from the management as well.
The total provisioning is about 30 billion, which is very similar to the prior quarter was 29 billion. It's a very similar amount. Our provision coverage ratio, if you see, has moved from 74% to 75%. So on the loans that are non-performing, there's a slightly higher provision coverage that we have. That's one. And the second thing is that the contingent provision I alluded to is about that relates to AAF, investments in AAF. That's part of the regulatory mandate, the RBI circular that requires certain provisions to be taken. The fair value of these AAF investments exceeds the book by about rupees 5 billion. But we still provided 100% on a prudent basis, because that's the circular says I cannot take the potential market value or realizable value. I need to take the book and provide for it. That's what on a conservative basis we have made the provision.
All right, that's the word coming in from the management at HDFC Bank. But along with that, we had other results also that were reported yesterday. And let's talk about two of those companies. And let's start by looking at ICICI Lombard. Now, the PAT, or the profits after tax, has come in at 431.5 crores, which is up 22.4% on a year-on-year basis. Premium income also up 13.5%. Coming in at 4,304 crores. So, well, let's talk about what brokerages are talking about. ICICI Lombard, what are they saying? Morgan Stanley has maintained an overweight rating and a target at 1750 for ICICI Lombard. They're saying that the profit after tax has missed the consensus by a whole of 10 to 15%. They've kept the combined ratio guidance of 102% by FY25 end. So, well, that could be a little optimistic going ahead. But they're also saying that early signs of competitive intensity is easing in the motor segment, and health business growth is likely to pick up in FY25 going ahead. So, well, overweight rating target at 1750 from Morgan Stanley on ICICI Lombard. With that, let's also talk about the other company that reported its numbers yesterday, and that is L&T Tech. Let me just give you a lowdown on what the numbers were. Revenue has come 1.5% higher on a sequential basis. PAT at 336.2 crores, up 6% on a sequential basis as well. EBIT margin has, well, stayed rather flat, 17.2 versus 17.07 on a quarter-on-quarter basis, and EBIT also has not seen much, 416 crore versus 407 crore on a sequential basis. The key highlights of L&T Tech's Q3 results are they've signed 6 more than 10 million TCV dollars in deals. So 6 of those deals coming in, and they're also reaffirming their FY25 guidance of 17.5 to 18.5% CC growth as well. And let's also see what Morgan Stanley has to say on L&T Tech. Then they've maintained an underweight rating target at 4,600 rupees per share. They're saying that constructive commentary can be seen on demand. There's a strong deal pipeline, and recent deal wins will also aid the stock going ahead. They're saying there's no decline coming across verticals, and that is comforting to see. But they're saying that they will need material acceleration in growth in FY25. So that's Morgan Stanley's view on L&T Tech, maintained an underweight rating target at 4,600 per share.
All right, Snehi. So those counters will remain in focus on account of earnings, but there's a host of other counters that will remain in focus on account of earnings as well as news flow. Ashesha is standing by with that list.
Snehi did talk about two important earnings. Let's highlight a few more. ICICI Securities also reported its numbers largely in line with what the street was working with. But on a year-on-year basis, ICICI Securities has reported strong growth. Revenues, for instance, have grown by about 50% on a year-on-year basis. Margins have also expanded to about 69% versus 62% that the company had reported in the previous quarter. And profit after tax has also seen a jump of nearly 66% on a year-on-year basis, largely in line, but on a year-on-year basis, solid growth is what ICICI Securities has reported. Let's also talk about PNC Infra. Now, this one is in focus on the back of an order win, where the company said that they've received HAM project worth about 1174 odd crores. So a big order win that has come through, on account of which this counter will be in focus today. Let's also throw light on GMR Infra, where the company has reported operational data for the month of December, where volumes have grown by about 15.3% on a year-on-year basis and 10.5% on a month-on-month basis. So strong growth is reported both on a month-on-month and year-on-year basis. GMR Infra will be in focus on the back of operational updates. GR Infra, meanwhile, will also be in focus, and that is because company's arm has executed 1085 crore contract with NHAI. So on the back of this execution that has come through, GMR Infra will also be in focus. Lastly, also keep an eye out on Som Distilleries, and this counter will be in focus because board of directors will be meeting today to consider their fundraising plans. Remember last week when the company announced that they will be considering fundraising today, the stock was up nearly 5%. So an important update which will come through, and the stock will be in focus today.
All right, Ashesha, thanks so much for taking us through that. We'll keep our eye on all of those counters as well today. But let's move on. And UBS has assumed coverage on Bajaj Finance with a sell rating. They believe that Jio Financial foray could hurt consumer loans in the medium term. Vamakshi is here with all of those details. Good morning, Vamakshi. Take it away.
Well, yes, Bajaj Finance in focus today on the back of a brokerage note that has come through from UBS. They have assumed coverage in this counter with a sell rating and target price of almost 6,800 rupees per share, which is a significant downside as compared to the current market price. Apart from that, they've highlighted that a high share in consumer finance is what the company has, and the competition specifically in this space is increasing, and therefore it is underappreciated. Jio Financial Services expansion in turn could put pressure on the consumer loans in the medium term as per UBS. In fact, they've also highlighted that the quality of the customer base is actually peaking out, and cross-selling is quite crucial in order to post incremental growth for Bajaj Finance. Apart from that, they've also highlighted that the competitive pressures are actually not fully priced in as far as Bajaj Finance is concerned, and that is the reason why they've assumed coverage in this counter with a sell rating, target price of 6,800 rupees per share, and on the back of that, keep an eye out on this counter. Absolutely. Thanks, Vamakshi. We'll keep an eye on that particular counter. But another sector that we will need to keep our eye on is cement. Now, that will be in the spotlight on the back of Morgan Stanley's note. The brokerage house has hiked targets of a lot of stocks in that particular space. Ashesha is standing by with that particular list.
Well, yes, Morgan Stanley has come out with a rather bullish note on the cement sector, where they've upgraded their rating for 2 cement counters and hiked target price for 6 cement counters. First up, they say that India's cement industry is in the middle of a multi-year demand upcycle. They say capacity expansion continues and utilization too is expected to remain at elevated levels. As far as margins are concerned, Morgan Stanley believes that margin expansion is expected to continue for some more time, and that further re-rating in cement counters is also on the cards. They've gone ahead and upgraded rating for 2 counters. First up, we will talk about Ambuja Cement, where they've upgraded their rating to overweight from their earlier equal weight rating. They've also gone ahead and hiked their target price from 390 to 600 rupees per share. Second counter which they have upgraded is ACC, where they have upgraded to equal weight from their earlier underweight rating, and they've hiked target price from 1650 rupees to 2400 rupees per share. As far as other 4 counters are concerned, they've hiked their target price for Ultratech to 12,000 rupees. For Dalmia Bharat, they've hiked it to 2,750 rupees. For Grasim to 2,430, and for Shri Cement to about 28,500. So very bullish positive note that has come in from Morgan Stanley, on account of which all of these cement counters will be in focus today.
Okay, Ashesha, thanks for taking us through that. Cement is a sector that we will be keeping our eye out on, but we're just getting some updates from China, and China has released two key sets of data points. One being its unemployment rate and the other being its GDP. Let's talk about GDP first, which was slightly below expectations, bringing 2023 growth to 5.2%. Now, GDP for the last 3 months of 2023 rose by 5.2%, and China's National Bureau of Statistics said this today morning. And well, that's well below the 5.3 forecast in a Reuters poll. So on the back of that, you can see Hang Seng. Let's get Hang Seng on the screen. We're seeing some sharp cuts coming in Hang Seng. 2.5% down, all 425-point downtick coming on Hang Seng. This is on the back of these numbers as well. Now let's talk about retail sales. Retail sales grew by 7.4% in December from a year ago. This also missed expectations of an 8% growth that was chimed in. Now industrial production rose by 6.8% in December from a year earlier. This has beat forecasts of 6.6% growth, so some positivity coming in at least on this industrial front. Fixed asset investment for 2023 rose by 3%, a touch above the predicted 2.9% increase, so another positive coming in over here. Now, the other data point that we need to talk about is the unemployment rate, because China has resumed reporting the unemployment rate for young people again. The National Bureau of Statistics said that excluding people still in school, the unemployment rate for young people aged 16 and 24 was at 14.9%, almost 15%, while the unemployment rate in cities in December was 5.1%. Remember, the Bureau had temporarily suspended the release of the younger age group's unemployment rate in the summer, citing the need to reassess calculation methods. That unemployment rate had previously climbed to records above 20%, so some cool down has come over there as well. That's another key positive. But the indices are not reacting well to the GDP data. Hang Seng down 2.7%, continues to bleed as we speak. Shanghai down almost 1% as we speak. But I would also like to bring Hang Seng on the screen once again, because that merits some attention. It's bleeding away 2.8%, 450 points downtick coming in on Hang Seng as we speak.
Well, Snehi, that's quite the downtick coming in on Hang Seng as well. Investors are likely to pass through this particular data set later in the day as well. Well, when you look at LTIMindtree, that is also all set to report its numbers. Poor revenue mix is likely to drag margin, while a slight uptick in the rupee revenue is on the cards. My colleague Anisha Jain joins in with what the street is penciling in for that particular counter.
Well, the expectations are muted from LTIMindtree this time. We are working with a constant currency growth of just around 1%. Of course, in terms of the frontline stocks, this will be one of the fastest growth if the company does deliver that, because the likes of Wipro as well as the other companies like Infosys have actually reported a bit of a decline. Separately, if you look at the dollar revenue, that's expected to be flat at $1,080 million. Rupee revenue is expected to jump up by 1.4%, and we are expecting a number which will be closer to 9,030 crores. Margins are also expected to see a bit of a dip, so margins might slide by as much as 30 basis points, and the profitability is expected to be flat at around 1,170 crores. This time around, there were higher furloughs in the high-tech business as well as BFSI vertical. That is something which might mar the performance of the company. The pass-through revenues is also something which might aid the top line, but there might be a pressure on the margins because the pass-through revenues are not very margin accretive, so there might be a bit of impact there. The deal win is expected to be muted at around $1.25 billion, and overall the poor revenue mix is something which might impact the margins. So overall, it's a bit of a muted expectation from LTIMindtree with a 1% constant currency growth. Let's see what the company delivers.
Well, Anisha, thanks for that. LTIMindtree is a counter that we'll be keeping our eye on. But another company that is all set to deliver its quarter 3 results is Asian Paints. Now, will the company see colourful gains? And what are the growth drivers over here? Lisa is joining in with what the street is penciling in. Lisa, good morning. Take it away.
Right, so Asian Paint is expected to report their results tomorrow, and the revenue growth that is expected to come at around 8% on year-on-year basis. That is mainly driven by the delayed festive as well as the wedding season which was seen, as well as the low base which was seen last year. Now, talking about the demand was stronger in October as well as November, but December that saw some muted number. Talking about the volume that grew at that is expected to grow at around 10% on year-on-year basis, but value growth is expected to be lower than the volume growth, and that is because the product mix that is mainly skewed towards the economy as well as the putty segment. Now, margin expansion is expected to be seen at around 21% versus 18.7% seen last year, and that is because of the softer raw material prices. Remember, crude oil as well as titanium dioxide, they are the main inputs for the paint companies, and that is expected. That has seen a softening in the prices. But margin expansion is also expected to be offset by the higher ad spends, which was mentioned by the management of Asian Paints last time. Now, the key monitorables or the key factors to watch out for will be the Grasim's entry in March and April, how the company will counter the competitive intensity as well as the demand outlook, the raw material outlook, the pricing trends as well as the rural recovery trends, whether there is any recovery seen in rural demand as well as the capex status. Now, the company had also given a guidance of around low double-digit volume guidance. So it has to be seen whether the company sticks to this guidance. So that's on Asian Paints, which is expected to report their results tomorrow.
Well, absolutely. Thank you so much, Lisa, for that update. As we wrap up on the show, we're also seeing on the GIFT Nifty that there's a gap down open on your screens. We closed above the 22,000 mark yesterday, and you're seeing a solid gap down open being indicated by the Nifty implied as well. But with this, it's curtains down on this edition of Market Cafe from me, Shreyanshi Singh, as well as Snehi Shah, and the entire team that put this show together. Thank you so much for watching. The market takes the action forward.